Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So in this video I'm explaining you two questions, that is accounts payable management in accounting software and what is account receivable and what are the objectives. These two questions are very important because almost every examination they will ask this type of questions from this unit number 4. That is what is account payable management in accounting software and what is account receivable management, what are the objectives. So last video I have explained you in detail regarding account receivable and account payable in Tally ERP 9 and what are the objectives of maintaining the details of bills. That's what I have discussed in the last video. So if you have not watched the last video, I suggest you to go to the playlist of my channel. Select the subject Computerized Accounting, unit number 4. Watch the first two videos. Be acquainted with account receivable and account payable. Now before starting this video, take a screenshot of the points which I have given on the board. Then I'll explain all the points of this accounts payable management and account receivable management. Come on, the first question is explain payables management in accounting software. What do you mean by payables management? So before explaining payables management, you must know what are accounts payable. Accounts payable are the money due by the business to the suppliers for credit purchases. A business, a trader will buy the goods from the supplier and they will get the credit period. Now the business has to make the payment to the vendor after a period of time. The amount payable or amount owing by the business to suppliers for the purpose of purchasing the goods on credit, that is called accounts payable. Now here accounts payable refer to the money due by a company to its creditors for the goods or services purchased on credit. Just like a business will sell the goods on credit, similarly a business may purchase the goods on credit. So when the business sells the goods on credit, it has to give credit period to the customers. Similarly, when a business purchases the goods from supplier, the supplier is allowing the credit period to the business. The business is getting the credit period. Now they have purchased, but the payment will be made after period of time. For example, I am having my business. You are the supplier. I purchase the goods from you and you have given me 2 months period. That means I have to make the payment for the purchases after 2 months. So from my point of view, you are a supplier. So amount is due to the supplier. This is accounts payable. So it includes. Now here we are not concerned only with accounts payable. We are concerned with accounts payable management. See here, every business has to manage this liability. What is that liability? Accounts payable. Manage means a number of processes, a number of activities are involved in managing the accounts payable. See here, the business is getting the advantage. What is the advantage? They have purchased the products now. Material are purchased now, but the payment has to be made after a period of time, like 2 months, 3 months, like that. So we are getting the credit period. So we must make the maximum advantage of this credit period. That means we have to make the payment timely. If we do not make the payment timely to the suppliers, next time the supplier will not supply the goods. Our reputation, the business reputation will be at stake. Nobody will have the trust, faith on the business. No supplier will come forward to supply the goods if we do not make the payment on time. So a number of activities are there in accounts payable management. The dual objective is, first of all, we should get the maximum advantage from the credit period allowed by the supplier. Secondly, we should not get a disreputation by not paying on time. Similarly, sometimes the suppliers will offer discount if we pay the amount earlier. Example, we have purchased the goods from a company. The company now says, if any buyer has paid the amount before this due date, we will offer 5% discount. The business has to see whether we can be able to take the advantage from this discount, evaluate and find out, is it advantageous to avail this discount? All these points come under accounts payable management. So it includes purchase order control. Before purchasing the goods, a purchase order should be made, properly executed. Orally, we will not purchase. For purchasing any material or any goods, the business must have some procedure, formality. Some order, purchase order should be prepared. Only on the basis of purchase order, goods will be purchased from the supplier. So first of all, purchase order control. Payment selection and handling. Who will make the payment? Who is responsible for making the payment and handling all the invoices on which payment has to be made? Similarly, forecasting cash requirement. How much cash we require to make the payment. That also planning has to be done. The business should not face the problem of cash shortage. Next one is invoice processing, check writing and control. Invoice processing, check writing and control. All these are the activities which come under accounts payable management. The business has to manage this liability. Accounts payable. Now, accounts payable management records the amount that is due to creditors, discount and payment terms. So three things you remember. The accounts payable management covers first the amount to be paid. How much is the amount to be paid to the supplier or creditor? Secondly, the accounts payable management must see any discount is being given by the supplier. Thirdly, what is the schedule of payment we have to make? Whether we have to make the payment monthly or quarterly or half yearly or annually. What is the schedule of payment? So all these three things, amount of payment, any discount given by the supplier, and what is the schedule of payment. These three will come under accounts payable management. It maintains a record which contains the information of the creditor such as name, address, phone number, email, etc. This accounts payable management must keep a record of the names, addresses, phone number, contact number, email, etc. of every creditor, every supplier. Then it helps in making accurate payment of bills and prevention from making the payment twice or fraud invoices. To prevent fraud invoices, to make double payment of the same invoice, to prevent this, we must manage the accounts payable. That's it. Now, factors to be considered for accounts payable management. What are the factors to be considered? The first factor, create credit policies. First of all, the business has to evaluate how much is the credit period allowed by different suppliers. We have to evaluate. So whichever supplier will give more credit period, from that supplier we purchase the goods. So we have to evaluate the credit policies of different suppliers. Then second, promote communication. There should be clear communication, crystal clear communication between the business and the supplier. That means all the terms and conditions of purchasing the goods and payment, everything should be communicated properly. Thirdly, automation to record the accounts. The accounts regarding the maintenance of ledger accounts of all suppliers, creditors, this should be automated. That means completely it should be through computers. And improving accounts payable. That means the quality of accounts payable should be good. That means any supplier should be ready to come forward and supply the goods to our business. That means we should have, good relations with the supplier. The relations will be good when we make the payment on time. That's all. So these are the points to be considered for managing the accounts payable. Now, bills payable screen in Tally ERP. So how we can be able to get the bills payable screen or accounts payable screen? Steps are given here. First step, open, go to gateway of Tally. First, open the Tally. Secondly, go to the display option. Select statement of account. Select outstanding. Select payables. By following these above steps, we can be able to view the bills payable screen in Tally ERP 9. That's all. The first question I have completed regarding accounts payable in accounting software. That's all, accounts payable. Now, second question is, what is account receivable management and what are its objectives? Account receivable management. Just like we have to manage the accounts payable, similarly we have to manage the account receivable. The payable is therefore payment to supplier. Receivable is the amount due from the customers when we sell the goods. So first of all, what is receivables management and explain its objectives. First, I'll explain you receivables management. Receivables are one of the important elements of current asset. Account payable is a liability. Account receivable is an asset. Which type of asset? Current asset. Because it is converted into cash within a period of 1 year. That's why account receivable is a part of current asset. The word receivables can be explained as follows. Simply, the meaning of receivables are the amount due from the customers for credit sales. For credit sales. So when a business sells the goods on credit to a customer and the amount is due from him, that is called receivables. So debt owed to the firm by the customer arising from the sale of goods or services in the ordinary course of business. This is the meaning, specific meaning of the term receivables. Now, receivable management is also known as trade credit management. Trade credit management is the other name of receivables management. Actually, proper management should be there on receivables because it may give profit or it may incur loss to the business. If we wrongly manage the receivables, we will incur loss. The business will incur loss. If we properly manage the receivables, definitely the profit will be more. Return on investment will be more if we properly manage the receivables. Now, hence, account receivable express the adequate time period in which customer must make the payment for goods purchased. So, account receivable management says proper time period should be given to the customer for making the payment. Example, we are having a business. We have to decide how much credit period should be allowed. The credit period should not be neither less nor high. What will happen if we make a credit period less compared to our competitors? Example, we are having a business, we allowed only 1 month credit period to our customers. So when the customer comes, we will say only 1 month credit period we are allowing. If you purchase now, in 1 month you have to make the payment. Otherwise, we will not sell. Whereas our competitors, they are allowing 3 months credit period. So definitely, the customers require more credit period. So all the customers will go to the competitor. Very few customers will come to us. That means our sales will come down. So we should not keep very less credit period. Similarly, we cannot keep a higher credit period. Example, our competitors, they are allowing only 3 months credit period and we are allowing 6 month credit period. It's too high. If we make lengthy credit period, then number of disadvantages will be there. The disadvantage is money will be blocked, interest charges will arise. Similarly, more chances of bad debts, irrecoverable debts. Because money delayed, money denied. If we give more time period, the chances of bad debts will arise. So a number of consequences will arise if we give more credit period. So neither less nor more. Adequate credit period should be given so that our profitability should also be there. Next, the firms provide trade credit in order to protect the sales from the competitors and attract customers who can purchase their products at reasonable prices. Why we allow credit period? If we sell the goods only on cash, no receivables. That means if I make in our business only cash sales, no credit sales, then definitely my sales will be very less because the competitors, they are offering credit period. So any customer wants credit period. That means the customer wants to buy the goods now and he wants to make the payment in future. Very few customers are there who wants to purchase the goods on cash. So we cannot rely only on cash. We have to rely on cash sales as well as credit sales. Because when we sell the goods on credit basis, our sales will increase. When sales increases, our profitability will also increase. Now the account receivable should neither be high nor it should be low. Credit policies should be framed to manage the receivables. Now see here. Ultimately, the credit period should neither be very high nor should be very low. Both are bad evils. That means if we keep the credit period low, then our sales will be low, our profitability will be low. If we keep a high credit period, our sales will increase definitely, but the interest charges on money blocked will be high. The bad debts chances will be more. So these are the consequences of keeping high. So neither high nor low. Proper credit policies should be made by the business in order to optimize the return on this investment. Next comes objectives of receivables management. Why we have to manage the receivables? The first, to assess the cost of receivables. See here, any asset will incur cost. In order to purchase any asset, we have to incur cost. Similarly, when we have receivables, receivable also involves cost because our money is blocked. We have produced the goods by incurring a cost. After producing the goods, we are selling the goods without getting any money. We are simply selling the goods and we are not getting any money. When we'll get the money? After 3 months. So till 3 months, our money is blocked and we have to pay interest charges. So we have to assess what will be the consequence of keeping receivables. Next, to manage the risk of profitability of the firm. That means by selling the goods on credit, then profitability will increase. How? More sales will be there. When more sales are there, more profit. So we have to analyze what is the impact on profitability if we sell the goods on credit. Next one, to optimize the sales value and investment in receivables. We'll get the benefit from higher sales, but we will incur loss on money invested in receivables. So two things are there, cost and benefit. The benefit, higher sales. The cost incurred in investment in receivables. We have to compare it. If we are getting more benefit from higher sales, then compared to the cost of investment in receivables, then we go ahead. Examples, the profits have increased by 20,000, whereas the cost has increased by 5,000. So we go ahead. Suppose if the benefit is less and cost is more, we should not increase the credit period. Next one is to develop the credit policy of the firm. The business has to make a credit policy regarding how much time period should be allowed to the customers. So this is called credit policy. So receivables management, receivables management, we must have a clear-cut credit policy. Next comes to assess the credit worthiness of the customers. We cannot apply the same rule to every customer. All the customers are not equally good. Some customers are very good, some customers are delaying customers. So we should not have the same policy on every customer. For some customers, we are giving 3 months credit period. For some customers, we are giving 2 months credit period. like the different credit period should be given to different customers according to their ability to pay, according to their past behavior in making the payment. To control the receivables, that means the receivables should not be over. That means excessive receivables should not be there. Then to smoothen the collection receivable from debtors, once the goods are sold after giving the credit period, we should not think that on time the customers will make the payment. We have to give the reminders. Follow-up procedure should be made in order to recover the amount from customers. Then to minimize the credit cost, the cost of receivables should be minimum. Lastly, to facilitate the firm in availing the benefit of factoring. A number of factors are there. Factors means those businesses which purchases the receivables from other businesses. A factoring company is there. This factory company will purchase the receivables of different companies. For example, we are having a company. We are having a receivable of 10 lakh rupees. This 10 lakh rupees we have to recover from the customers. We don't have such time. We are engaged in other activities. So we will sell our receivables to another business. One ABC factoring company is there. This ABC factoring company says, we will purchase your receivables and we will collect all the receivables. We will take our own commission and hand it over to the remaining amount to our business. For example, they are charging 1% commission. So what I will do is, I will sell away all my receivables to factoring company. The factory company will take the responsibility of collecting the receivable from customers. So after collecting the amount from customers, they will take their own commission and remaining amount we handed it over to the company. This is called factoring. The only advantage is it is not our headache. The collection is not our job. We have sold the collection job to another company. That is called factoring. So we have to evaluate whether this is beneficial to the company or not. That's all. So in this video, I have explained you two questions. The first question, explain accounts payable management in accounting software. And secondly, what is account receivable management and what are the objectives of account receivable management? These questions are also very, very important from examination point of view. Inshallah, the next topic we'll take up in the next video.